Hi guys, it's Chris here. I just want to do a little tutorial on divergence. Um, it's it's something which when you first start trading is quite difficult to spot, but it's something which is also very worthwhile learning and taking time to actually just go through some past examples and just see how the divergence works out. I'll try and see if I can find a couple of examples here for you on the screen. But basically what we're looking at, let's try and get to this example now. Okay, here's an example. Okay, so basically if you look at your trending markets and you have your A, and then you have a B, and then you have a C. Okay, so basically once you come down here and you'll see you've gone from your C point and it's broken the low of this B, then you would rename your ABCs, and then you would have your C would become A, and then you would also get another B down here. So you'll find if you draw a line from B through to B, you can very clearly see that I've got a downward slope happening. If we take these points at the end of the zigzags and we put a vertical line there, one there, and one there, and we draw a line from on the cloud of the MACD. Okay, so we take it from there through to where it intersects on the MACD. You'll see that the slope of the MACD is actually sloping upwards. So what we would normally expect is we'd normally expect when the slope from B to B, if it was going down, you would normally expect the slope of the MACD to also be going down. When you see something that is different to that, in other words, when your B to B is sloping down, but your MACD is sloping up, it's what we call divergence. It means that it's sloping in different directions. And it's actually an indication. It can either be an indication of a reversal of trend, or it can sometimes just be like a retracement or indication of another retracement. But it's something very important to look out for, and you'll find that it will really help your trading once you do get to identify these divergence spots. You can see basically what happened. We had the divergence there, on from B to B is sloping down, the MACD is sloping up, and then price ended up going up. So I'll try and find a couple more examples for you. Here's another example. So we've got, if we have, okay, if this is our A, and then we've got our B, and then we've got our C, and then when the price breaks through the B, then your C point becomes your new A, and then you get a new B at the top. Okay, so again, if we put almost like a trend line, don't get confused with the trend line, guys. The trend line always goes from A through to C, but not a trend line. It's actually on the other side of the pattern. So always draw your divergence lines from B to B, right? And then draw a vertical line. A vertical line on your B points. And you'll notice there, although my from B to B is pointing up, if I just take that where it intersects on the MACD, it's actually, again, it's a sign of divergence. It's a sign that the trend is starting to weaken, and there could be either a retracement or a possible trend reversal. And you can see again what happened after we've hit there. Then the price started to come down a bit. Okay, so here again we've got divergence. If we take these points here on the edge of that zigzag, and then here, you've got the slope going up. But if you take the points of the MACD where they intersect the clouds, it's going down. So we've got divergence. So what happened after we got that divergence? Price came down again. So even, you know, probably the most powerful points of divergence are going to be at the corners of your zigzags. But sometimes if you see the MACD cloud coming and bumping down like this and then giving a smaller bump here, then you can also look in between, for points in between the zigzags. For example, take where the MACD is at its the fattest, if you like, and then we move the vertical line here to that zigzag. You can very clearly see that the price is sloping down here. But if you look at the MACD, then you'll see we've got a very significant slope up. So yeah, it's a really good. I mean, you can see how it does work there. It doesn't work every single time, but neither does any other candlestick pattern or indicator. So it is a really, really useful tool. I use it all the time in my trading. If you don't use it already, then guys, do yourself a favor, you know, get to grips with the divergence. And if you're struggling to understand or you need any help, then, you know, come into the office or give me a call, drop me an email, hop into the chat room, and, you know, I'll gladly go through it again with you. So I hope that makes sense. If there's any questions, just give me a shout. Thanks, guys.